Obviously, market timing is huge. How do we time it together? How do we understand the time? The best times to trade, I guess is what I'm trying to say. Time of day. What's the best time to trade? We went over this already. First 4 hours of London. Asia ending, first couple hours of London. 8 o'clock till about noon U.S. session. Those are the best hours to be in front of your screen. If you're going to do one session, extend that time out a little bit. Like maybe catch last hour of Asia and go past mid-session London, maybe till 6 a.m. or something. All right, the time of the week. All right, remember I told you that the first part of the week is the Asian session, right? The first part of the week, the Sunday, Monday session, or I'm sorry, the first 8 hours, the Asian session, first part of the week is this part of the cycle, right? It's the accumulation phase of the cycle. So it would make sense that if Sunday, Monday, or Sunday's accumulation, the first part of the week on the bigger time cycle is the stop hunt, and then Wednesday, Thursday, Friday is the trend run for the week, right? Friday they end. Then it would make sense that more opportunity would be offered to you analyzing the week backwards. If this is the cycle for the week, the day, and smaller microcycles, then it would make sense. Okay, it would make sense that you would have opportunity, greater move on Friday, right? The 33 trades come in here, so there's more aggressive move in the cycle, the reversal. Wednesday going into Thursday, aggressive moves. Tuesday going into Wednesday, and Monday going into Tuesday. It's the week backwards. The volatility or aggressive moves are seen later in the cycle. So when's the best day to trade? Wednesday, Thursday, Thursday, Friday. Those are the best days to trade. You get nice runs most of the time during those days. So if you want to know, just work it backwards. Time of the year. Okay? Forex, I know like a lot of people go on holiday, May, June, and the volatilities or the ADRs calm down. But for the most part, the only real time that I'm aware of, and this was taught to me, it might have changed, was that these guys go on break around mid-December and don't come back until the Monday following New Year's of the week. Like last year, it was like the 13th, and they didn't come back until like the 8th or 9th or something like that, the following Monday after the holiday. Like if New Year's Day is on a Wednesday, they're not coming back till that Monday. They don't come back Thursday like everybody else right after work, after New Year's Day. They come back the following Monday. So what happens is, in essence, the inmates are running the asylum. The guys that are trying to make a name for themselves, that are working their way up the desk, those guys are running it. Those guys don't get a Christmas break. So what happens is, they may or may not throw a pattern. They're not allowed to do a lot of particular things, and you'll see a lot of sideways movement, not a lot of follow through in the market. As soon as I say that, like last year was a pretty good Christmas session. But for the most part, as a general rule, those guys are usually stole enough money for the year, they leave for Aspen or Hawaii or wherever they want to go, Fiji. I don't know where they vacation, but you could guess, right? All right. Time mapping. I'm not going to write all the times out again. You can go back and review the recording, but you understand generally the session times based on New York. Time mapping is very important to do it with your broker. Ray and Joe are working on a fix for that. There's also an indicator you drop it on there, and it'll ping your dealer server. Pretty sure it's in there. If not, I'll talk to Joe and Ray about getting it in there. You ping your dealer server, and a big fat letters tells you your GMT -2, your GMT +1. It tells you where your dealer server is trading at. And that's what you need to make the adjustments in the time box for. But I think, if I'm not mistaken, that the indicator fix that Ray is working on will be the end of all these box problems for everybody. I'm hoping that's the solution. Believe it or not, I get hundreds of emails, and the majority of the questions are that people can't figure out the box. And it drives me so crazy that it's so difficult across different array of brokers. I could tell you for a fact that MB Trading is a problem because they use standard local time. They use their local dealer time or California time. But anyway, everyone has a wristwatch, man, or a wall clock or something, or buy a clock radio and plug it in your desk and put it up there. And figure out what time is 3:45 New York and 9:45 New York where you live. And set an alarm. Buy one that has 2 alarms and set an alarm at 3:30 to watch those candles. Keep an eye. That would be your Brinks trade coming into play. Okay, my goodness, I have a stupid watch I exercise with. I think it's an Ironman. There's like 15 alarms, 25 time zones. 24 time zones. There's only 24 time zones around the world. I'm getting carried away. But anyway, you know what I mean. There's a bunch of stopwatches, clocks, countdown timers, time zones around the world. There's so many things in a little $50 wristwatch. Buy yourself one and set your times to coincide with 3 to 3:30, to coincide with the gap times and the session starts. And leave it on your desk or wear it. There you go. Helen said iPhone's got a bunch of stuff. She's right. And someone just put timeanddate.com. There's world clocks in there. Don't let something like a box screw you up. Don't get so bent on these boxes that like, man, Steve, these boxes are kicking my ass and I can't do my homework and I can't do this and can't do that. Man, I wrote the boxes so they didn't exist until 4 or 5 years ago. The boxes weren't given to me. You guys know how I learned how to trade, and I'll take a minute for the new people. I used to, at 1 a.m. New York, record the Asian high and Asian low. And then subtract the high from the low, the initial high from the initial low, and see if it was 50 pips or less. Anything that was over 50 pips, I would eliminate from my list. And then, this is what I used to do, man. It's crazy. Okay, I would draw the box, in essence, by calculating the high and low at 1 a.m. And I've been through this with you guys, but real quick. At 1 a.m., I take the difference from here to here, the price difference. Okay, I write that down. All right, pound has 35 pips. That's good. GBP CHF 75. Get rid of that pair. This euro looks good. It's 27. All right, you know what? These two look good. I'm stalking these today. Now, I would have to write down the price. I had like a little column in a notebook, and I would go, okay, the price is 122.16. Okay, the dealer is near the high. All right, or the dealer is in mid-level consolidation. He's trading between 122.16 and 121.85, whatever. I'm just throwing some numbers out there. Okay, where's the dealer? All right, he's in mid-level consolidation. Cool. Then I would come back and look, and I'd wait for the dealer to extend one or two of these prices. All right, the dealer hit 22.16. He's right by 22.16. He's holding. All right, that's burst one. All right, cancel 22.16. The dealer is now at 22.28. He's going up. All right. Oh, he hit it again. Cancel that. What's he at now? 22.35. All right, good. All right, what's he at now? All right, he just went 22.40 and he's holding the number. That's how I did 3 swipes at the high. That's how I learned. That's why when I tell you buy the numbers, the candles are by the numbers. So don't whine that you can't figure out a blue box or give me any crap about the blue box. I wrote the blue box. The blue box came from a notebook full of this shit on the screen right now. And to be quite honest with you, that's what made me better, is doing the legwork. When you sit there and look at a blue box, you're not getting the meaning. You're looking at candles. Of course, you guys have it easier because I took what was taught to me and converted it to a chart and wrote it. And that those of you who don't know the story is I wanted to teach my wife how to trade. And that's how this whole thing started. And she was like, is there like a book or something I could read? And I was like, no, there's no book. You got to just do this shit. That's how it started. So I said, all right, you know what? I'm going to write something for you to read and make like an instruction manual. And lo and behold, here I am. I'm teaching. So this is how I got my start. This is how I was taught how to do it. Because the dealer, remember, the dealer doesn't look at a chart. He doesn't care about the charts. He cares about where the orders are. So how can I track the dealer without a chart? by watching how he handles the numbers, which is what the business is about, the money and the numbers. So that's how I learned how to trade without a chart. So now, when you put that information onto a chart and a little blue box that draws the initial high and initial low and stops painting at 1 o'clock, that's how I learned. That's where these boxes came from. Okay, and then we expect the U.S. to reverse, so we highlighted that segment of the chart. But really the only levels you need to know are the blue box. What I like to say about the red box is that when the red box starts to appear on my chart, I turn into a vampire. That means the daylight's coming, and it's like, I got to fly back to my cave and hang upside down. And yes, I have room darkening shades, and my room is pitch black. I can't even see my hand in front of my face because I sleep during the day. And if you know about the serotonin, melatonin cycles and all that garbage, you don't get restful sleep if there's light in your room. Your body never cycles right. Okay? So understand that there's ways around this box thing until Ray gets it fixed. And I've got a lot of whiny emails, and I love the emails. But everyone says, I can't get my box, or I don't understand. I didn't have a box. I had a wristwatch and a notebook. Right? You could picture me sitting next to a kerosene lamp, right, with wooden floors and a big wagon wheel and some horses outside. That's what it sounds like when I tell the story, right? That's like my parents walked to school uphill both ways in 6 feet of snow. That's about what it sounds like. But I'm not telling you, oh, I had it so rough. I'm just telling you that you make do, man. You make do, you figure it out. You figure out you buy a wristwatch for $50. All right? Yeah, I wrote on the back of a shovel with charcoal. We used to paint. We would put like paintings on the cave wall. I know. All right. Anyway, I got off on a tangent, but don't let this stuff hang you up. That's the biggest hang up of the whole group, and I just don't understand. Like, for some reason, everyone harps on these boxes, and it drives you crazy. Don't let these boxes derail you from what I've given you here. All right? That's the whole point of the conversation. Don't let these boxes or these brink shadows, don't let that stuff derail you, man. What I was going to say was, if you don't know what time the 345 candle is, go to your dealer and get this line right here and count the number of candles from here to here. And there's even a tool for that. You click on it and drag it, and it'll tell you how many candles there are. Then from here to here, how many candles to the brink shadow? All right? That's what I need you to do. That's the way you can figure it out if the boxes aren't right or wrong. All right, man? Yeah, someone said $50 wristwatch, $9 at Walmart. I think a Timex Ironman retails for around $30 to $50. And that's the watch I exercise with, that's all. And it has it really does have all the time zones, multiple stopwatches, multiple countdown timers on it. Okay. All right, so the blue box. The blue box will paint at the start of each day, depending on your deal, around 5 or 6 p.m. The blue box will stop painting around 1 a.m. or 2 a.m. Either way is okay. But I do 1 a.m. because that's how I was taught to calculate the time. But understand, you have the visuals. You have the luxury of the visuals. You see the chart. So if it stops painting at 1:30, 1:45, 2 o'clock, it's okay. Just understand what the purpose of the blue box is. The purpose of the blue box is to help you see and identify this. 3 swipes at the high or low, the stop hunt. A visible stop hunt. That's what it's for. Nothing else. It's to help you take this and look at the data, the high and low, where the consolidation is, and then the dealer extends the high. Right? That pin locks the trade. There's the shift. That's what you're looking for. You're looking to analyze how the dealer is going to handle. Is he 25 to 50 pips above or below the blue box? And what that simply means is, going by the numbers, whatever this number is, you add, I used to add 25 to 50 pips, and I have a rough idea of what my price bracket target would be. and I come down here, take the low, subtract 25 and 50 pips off of here, and I understand what my downside target bracket is. And now the dealer's here. I expect him to do this, or I expect him to do this by the numbers. You have, I don't know if I can make it any easier for you, but you have a box here that calculates the stop hunt box and puts it there and shadows it gray. Then you have a little box that draws right around where the gap time is. Okay? The stop hunt is calculated from the initial high or the initial low. Okay? It has nothing to do with where the bar is. You just want to you want to have a visual. Because if price is in here, the reason why I'm saying, if price is down here, right? Let's say he's on the bottom side of the Asian range for whatever reason, inducing people to get short. Okay? If the dealer's on the bottom side of the range and he makes a 25 to 50 pip stop hunt, well, we recorded the high of the box over here, right? So what's going to happen is you'll have the consolidation down here, and then he'll vector 1, and that candle might be 15, 20 pips, and then he'll vector 2 and 3, and you'll say, there's only a 15 pip stop hunt above the box. Understand? You're looking for a clean swipe towards the high. All right? And if you don't like the colors, I know you're kidding, but change them. I don't care. Make them faint, or some people made them beige or whatever, or they made them light gray. Listen, that stuff doesn't offend me, man. All right? Red box. Red box is my vampire warning. We'll paint at the start of USA session around 8 to 11. Okay? You have the Brink shadow in there. US session to around 11, 12 o'clock. Depending on how you want it. I used to have it 8 to 10, but when everybody started messing with it, it became 8 to 11, and it's too much trouble to change all your templates over and over again. So just get used to what you got, and you have a watch, know where you are. Say, oh man, if 3 candles are inside the red box, it happens to be 9:45 on my chart. That's how it matches up. Just get used to what you're looking for. This helps you identify the New York reversal trade, gives you an idea that you're changing sessions. And listen, can't say this enough. I can triple underscore this, still doesn't matter. Your boxes don't have to match what's on my charts. We're dealing at brokers all around the world, different time zones, different places, U.S. restrictions for some, non-U.S. restrictions for others. Jerry, we're good, man. Okay, so your boxes do not have to match mine. You just have to know the purpose of the box, and that's what I'm explaining now. The purpose of the box is to analyze the volume or the market maker spread and how those numbers are handled at the start of the session at 1 o'clock, 2 o'clock in the morning. That's it. That's all the boxes are for. All right? Good stuff. Good stuff. All right. Just so you know, that's the ranges. Why do we have a range on the U.S. box? Because when the guy programmed it for me, he asked me, it's no big deal to throw it in there, so we put the range on here so you can know what the movement is for U.S. session. That's it. All right? All right, so we got to try to make sense of all this stuff. Hopefully I've done a pretty good job of doing that, but let's try anyway. So how do you check down when you come into your office? What are you looking for? What should you do? What's your first thing you do? Okay, well, you come in and you want to get an idea, a feel for what's going on. I'd like you to start with the higher time frame. Some of you started looking at the dailies and the 4-hour, that's fine. And I'm not used to looking at the higher time frames because I understand where we are in the cycle and how to read the chart. So when I started teaching, I was remiss in not including that. So look at the 4-hour, look at the daily, see if there's an all-time high, yearly low coming into play. See where you are in relation to the tracers. You should just glance at the charts and look for the highs and stuff, but when you're trading, you don't have to go back 5 years because the dealers don't give a crap about that stuff. You need to know what happened in the last 3 to 5 days. Right here. Okay, 3 to 5 days. Why? You need to pick up. It happens to be Wednesday. So first part of the week, false move week beginning, support and resistance. You need to know if there was a peak formation lower high Friday and the dealer's in the continuation mode from Friday or Thursday or Friday. So if he's in the continuation mode from Thursday or Friday, he's going to come out, false move week beginning in line with the peak, stop hunt low, continue to rise. if it was a peak formation low. That's what you need 3 to 5 days of data for. Obviously, if it's Sunday, Monday, you need to look at Wednesday, Thursday, Friday and see what happened. Was there a reversal? Was there a continuation of the prevailing trend? Those are the things you have to ask yourself. Am I in V1 of the cycle or A1 of the cycle? Well, if I know I'm there, two things should pop into your head. I'm not going to counter, and I can expect a straight rise out of there. Well, another thing should pop into your head. Possibility for a safety trade coming in. Right? So I know where I'm at. I'm giving myself a rough idea, a bias of what he's going to do. And then I wait. When I move, you move. When I move, you move. When the dealer moves, you move. That's the song I'll play for you on break. When I move, you move. Just like that. When I move, you move. Just like that. You wait for the dealer to show his hand. Okay? Now, you should have formed a directional bias, right? But remember, the human mind is tricky. I talked about this for a few minutes. Don't get so jammed up thinking short that when the dealer comes out and throws a long right in your face, right to the mayonnaise, you're like, oh, well, it's short. Don't get so locked up that you miss the pattern. There's only one place where I don't want you to be a sucker, and that's coming out of V1 and A1. That's it. Okay? Or is it's Apex and Nadir 1? I don't know. Is that right? I don't know. But always look at least start with the 1 hour. You can start with a 4 hour, drill down real quick, take a quick look. Analyze the psychological support and resistance zone. Carry those lines onto your 15-minute chart. That's cool too, no problem. Ask yourself, what level am I in? Okay? Do I have identified the peak formation? Am I sunny? Identified peak formation on Tuesday, then Wednesday, Thursday, and possible reversal on Friday. That's what I'm looking for. Zenith and Nadir. Zenith 1, Nadir 1. Okay? Am I in the cycle? Did I notice stop hunt anchor? W? Am I notice V1, V2? Then I'm coming into M territory, looking for the short. But if the dealer gives me a reset continuation, I got him too. I'm ready. What day of the week is it? Is it Wednesday? Is it Friday? False move week beginning, Sunday, Monday. Midweek reversal, Tuesday, Wednesday, Thursday can come in midweek. Friday, U.S. session, the dealer's going to spike the high or low and pull off and go into a sideways consolidation. If it's 11 o'clock on a Friday, I should just be wrapping it up. I shouldn't be looking for anything. Okay? Go back and look at non-farm, and that's exactly what I'm talking about. Dealer spikes the low, spikes the high, comes back into mid-range consolidation, mid-level. Everybody's stuck going into Sunday, Monday, makes them pay swap, and then hits them with a gap or traps them. That's the plan for those guys, all right? So you're checking down, you're looking at stuff. Daily chart. Daily chart is absolutely useless except for one thing. The daily chart, all we care about it is the color of the candle, all right? You look for major highs and lows. You look for LOY and LOYs and what is it? HOYs. Low of the year, high of the year. Some of the pairs are getting near their all-time or last year's high, last year's low. Remember, those areas are for suckers. Don't take the break on that. Look for the dealer to spike them. Look for the behaviors. Sometimes people get lucky. They'll take the breakout on the low of the year and it'll run 100, 200 pips. That's their big trade for the season for them. We don't trade that stuff. It's for suckers. We look for the dealer to make the outside structure fakes to these areas and pull back, like that pound picture I showed you. Dealer went right up to the high of the year. He spiked it, made an outside structure, got everybody piling on long, thinking pound was going to the moon, and he corrected big off of that area and jammed everybody. And last I checked, there's still some hedge funds with open float up there. Believe it or not, it's true. All right. The reason we need yesterday's candle color on the daily chart, yesterday's color. So it's after 5 now. So I want Euro's color, red, green, blue, purple, whatever the color is. Just understand that if it was an up day or a down day. Those numbers from yesterday's candle will project the pivot grid for tomorrow's possible highs and lows. I'll talk about that. Okay? All right. So what's your check down? What should you be doing? You're trying to get an idea of the overall direction. The real trend versus the retail trader's trend. Okay? Are you going to be a counter trend today? Are you in level 3? You're expecting the reversal. So you're looking for top side. If the price has been going up, you're looking for top side reversal. Price has been running all week straight up. Looking for a possible jam on Friday. Jam the traders. So if he jams the traders, he's going to end mid-level consolidation. So you're looking for a spike high if he's been rising, spike low if he's been dropping. Your job is to react to what the market maker does. It's not to try to get out in front of him. It's not your job. That's for the retail traders. Your job is to, when he moves, you make your move. When he shows his hand, you react. Have a solid bias. Project and anticipate what he will do next. Project and anticipate. Okay? As soon as he shows you, you take him. Okay? The dealer made the peak formation low, consolidated. Okay? I saw this trade coming a mile away. The safety trade comes because it's safe to trade this. Okay? Let's analyze this chart for a minute because it's very telling. Okay. What level am I in? Level 3. Steve, how in the hell can you know you're in level 3 by looking at this chart? Look at the distance between the averages. Look at that. If price action is below all 3 moving averages, this is the 4-hour representation. This is the 1-hour representation. This is the intraday balance line. These are our signal lines. If price is below those averages with a great deal of authority, like separation that's really far off those averages, that tells me right off the bat. How does averages get separated from a movement of price action declining to the downside in order to get away from those? How does averages get separated on the upside trend? There had to have been a crossover several days back, and price had to be rising to create the separation in the averages. So if I understand that, on a 15-minute chart, I walk up to a chart and I go, all right, looks like level 3 behavior. The dealer made a nice aggressive spike. Notice how the trend just kind of runs down, and then towards the last leg of the trend, he shows acceleration. It almost looks like it's falling straight off a cliff. All right, the question was, what time frame is this? And most of you know the answer. Helen, you should know the answer. Anyone want to take a stab at it? Yes, my dear, you answered your own question. When do I ever show anything other than the 15-minute chart? Just when we're checking down? 15, just checking, all right. 15 minutes, man, that's it. What my goal for you, I want you to look at the other charts, but my goal for you is to learn to reside on the 15-minute time frame and know it like the back of your hand. And these are the things that, the nuances you need to learn to pick up. This is what I'm talking about. Okay? So back to where I was. The separation on the averages, right? Notice something else too. Here's yesterday's low. See it? Yesterday's low, okay? Notice how the dealer spiked almost as if there's 3 vectors there. Okay? Here's yesterday's low. 1, 2, 3 vectors to the low, right? 3 swipes to the low. Now you got, check this, okay? You got your inverted head and shoulders, shark fin low, blood in the water, below the support line. See the head and shoulders in there? Beautiful. Okay. Those are the kind of things that tell me in order to get RSI all the way down, price has to be declining. In order to get RSI at the 23 level or above the 72 level, right? Below the 32 or above the 68, you've got to have some push. Okay? Yes, this is a 333 trade, a 3 trade. The last push that the dealer makes to induce everybody to take it is 3 aggressive pushes towards the low. Think about this shit, how it is. When you realize what's going on, all right, he shows you a downtrend. He crosses all the averages over. He shows you, if you know how to read RSI, anything below the market baseline is a downtrend. These are all signals are all validated now. The dealer has validated all the signals. He makes a quasi-outside structure, trades off of the level quickly. He spikes it, makes a big outside structure, and then trades in consolidation here and rises back. Right, hugs the 50. Why does he hug the 50? Because people use the 50 EMA as a re-entry point in a downtrend. Okay? A re-entry point in a downtrend. Because why? They're projecting the, oh shit, it's all the way up here. This is a hell of an ABCD trade. Look at that. I'm going to Tahiti, baby. I'm going to live in those shacks that Carr has. on his screensaver, right? That's what they're thinking. So what happens is they come in here, they put their stops up in here, and the dealer goes boom, boom. He gives them a reason to pile on and take the trade. People don't understand the timing element, switching over from day to day, the accumulation phase of the market. Right? How many people say, okay, it's in consolidation, I'll put my pending orders right up in here, and I'll validate that. And then what happens is, when he comes and makes the AB, I simply add C over here, and a break of the consolidation zone in C projects me out to D, and I'll see you in Hawaii. That's what people do. They know this. So what do? It's kind of disgusting when you look at it. He validates all the orders, but it's in a form of a stop hunt. But remember, the human mind sees short because you have trading below all the averages in all time frames. TDI, RSI line is below its market baseline. Sell the rallies in a downtrend. Textbook stuff. I didn't write that. I didn't invent that. And everybody falls for that. But then the mind gets locked on a downside bias, and you miss the little nuances. Head and shoulders, shark fin to the low side. Okay? Consolidation, back into the bands. Bands tighten up. I'm expecting peak formation, trap low, level 3. I'm looking for a nice safety trade, W issue. Blood in the water. Got you, baby. Own you today. Okay? That's the kind of stuff. The low of the day holds for 30 to 90 minutes. He forms a W. It is 25 to 75 pips off of yesterday's peak formation low. More people do the Fibonacci projection short because all the technicals are short. The trend has been dropping. Everybody's like, man, pair's going down, pair's going down. You better get on, you better get on. Well, guess what? Everybody gets on. The dealer snatches it away and ends the run as a surprise. Okay? Beautiful stuff. This is where the safety trade was developed. Is that you know he's going to validate the technicals with a stop hunt. And what happens is, remember I told you the 25 to 75 pips, here's why. There's no way to know how many orders are aggregated in here from this move right here. There's no way to know. There's no way to know where the heaviest volume of trap traders lies. Could be all the way down here. So the distance of the stop hunt is twofold. It's to hit the stops, pick up the pendings. But now, at the same time, his fat fingers are full of money. So if he goes down too far and gets to an order or to a point on this cycle where enough traders click out, the money in essence slips through his fingers. He's not in the business of allowing money to slip through his fingers. So he makes the push. This is a mild stop hunt. Look how tight the range is too, by the way. 21 pips, Asian range tight. It's tight because he's holding the cash. And what does he do? Hits the stops of anybody that got short at the 50, drops it down, validates those orders, but doesn't let himself slip far enough or price slip far enough that it turns into a losing proposition of net shorts clicking out. Okay? And then he issues exactly, look, shark fin downside, blood in the water, W formation, 25 to 50 pips below the box, safety coming off of peak formation's a lock. When he does this, the peak formation's a lock. I know it's going to hold. The dealer's looking to get the hell out of there. There you go. That's where the safety trade comes in. Either can take in this consolidation or take here. Okay? Good stuff. Absolutely not would have timed out. This trade would not have timed out. As soon as if you got in on the second leg of the W, you went right into profit. Hit the stops, rise. Hit the stops, rise. TDI is going to be covered. Hang loose. All right, so your job is to project and anticipate. All right, here's a Sunday gap down, rise, right? Caught the traders long, opened on Sunday, gap down, spiked, pulled back into the Asian range, aggressive move. The dealer comes in. This is yesterday's low. Because the Sunday-Monday changeover. Okay? This is the start of the week. This is the changeover from Sunday to Monday. There's only a 4-hour, depending on the dealer, about a 4-hour day from Sunday to Monday, depending on where you're from. Okay? So here you go. Project and anticipate. I see the dealer coming in and issuing pins in here. I'm waiting for a second leg to hold, and I'm anticipating the rise. Project what the dealer's going to do next and anticipate his move. Project and anticipate. All right? Project. Here's my safety trade coming in. I saw this coming from a mile away. Project and anticipate the dealer's next move. Okay? What's the distance from here to here? You could simply take the peak formation low, add 75 pips to it, okay? Add 25 pips to it, and you could know where the stop hunt's going to come in for the safety trade. Understand? That's what I'm talking about. Peak formation, shark fin forming, slightly elevated, safety trade setting up. Project and anticipate the dealer's next move. All right? Project and anticipate. What can I expect for the day? What can I expect him to do? Okay? Project and anticipate what he's going to do. Okay? Into consolidation, railroad tracks. Second leg low of the day. Consolidation. Vector. Comes back again, U.S. session. Slightly lower. 22 trade, second leg of a second leg. Anticipate, have an idea what to expect from the dealer. Have an idea what his behaviors will look like. Okay, major downtrend, right? GBP CHF. But notice how the trend goes down. There's the gap. Okay? He works the low. He works the low slightly below. My projection is end of the day consolidation, stop hunt, safety trade, rise. Saw this coming a mile away. That's the kind of stuff I need you to do. Look at a couple of days of data. Man, price has been dropping for a while. There's been some resets or retracements within that move, but I'm in level 3. Nice chop. Let me see what the dealer did. He gapped down on Sunday. He's been choppy. He's been showing me level 3 behavior. I project and anticipate tomorrow he's going to give me some type of safety trade, something that looks like a safety trade. Okay? We know that they go back towards these averages. We can anticipate where the averages will paint to. Right? Project. Take it and go, all right, if I was a 4-hour average and I'm averaging to the downside, I would start averaging right in here maybe. Right? The 200, if price starts to turn around, should roll flat, project it out. The 50, same thing. If price turns around, should start to roll over. So now I can come in here. I can say I'm looking for some kind of stop hunt, 25 to 75 pips off of the low that's been formed. I know I'm dealing with the pound cross. I know that the dealer likes to make an approximate 50 pip stop hunt on those pairs. So I could see where the consolidation is. I can project the 50 points below the Asian range, and damn if I can't almost guess where he's going to stop hunt to. That's what I mean. This is the kind of stuff you got to walk up to a chart, and the entire retail world is going to tell you, oh, I'm looking for places to get short here. This is textbook. Trend is down on all major time frames. 1 hour, 4 hour, down. I'm looking for places, I'm looking to sell the rallies in a downtrend. Right? That's what textbooks will tell you. I'm telling you that we're in level 3 sideways behavior. The dealer spikes the low one more time, comes back above. Price has been dropping. I'm expecting a safety trade to produce or present. I could do the math calculations and figure out almost exactly where that shit's going to come in, and I got them. The rest of the world is going to be shortened. I'm going to be taking it long in line with the dealers because I know it's about the money. All right, project and anticipate. You asked me what that green line was before. That was my entry. That is. I was kidding, but not really. All right, and there's a joke. Nelson quoted me. Do not hit the high in front of me 3 times. I will own your ass. And this is one of those examples. The dealer went up there, spiked it, pulled back, spiked it again. I was watching, waiting for the session to change over, and he went right to the high and sat on it with that candle. And he even closed on it. He sat there, right there. As soon as this candle opened, I pulled the trigger, and my stop loss was like 5 pips. Who wouldn't take that risk? And guess what? It ain't coming back, baby. And you can see, obviously, this worked out. Okay? And it was worth a 5 pip risk when the dealer has went flat, dead flat on the high. Look at that. Picture in your mind now that you know better what's going on here. You come in, you see this, draw your line. Okay? 22 pip range. Very tight. Dealer vectors. Right? He went in, he stayed in consolidation. Why would he do that? Handle the crosses. He stayed in consolidation. I'm looking for a break of the London high now. He gave me the break going into the US. 1, 2, 3. He vectored in 3 pushes to the high, pulled back. He said, oh, you don't think it's long? Ha! Go long. People did. Stopped out the shorts. You don't think it's long? Let me hang out here another minute. Pull it all back. Take out the stops. Getting ready to change sessions? Ha! Go up there again. Now I'm showing you long. People that don't know any better are piling on long with that big fat green candle. Your indication that this is a good trade is that he's laying right on the high and not breaking it. And just picture in your mind that his big fat hand is right here doing this crap. Grabbing. That's a terrible hand, by the way. He's grabbing, 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 grabbing. When he does that, you got him. It's worth the 5, 7 pip risk to take that trade. Okay? If he broke the high and stopped me out, who cares? Okay? Beautiful stuff. When you know, you know. All right, so what are you looking for when now you've done your general check down, you looked at the daily, you know the candle color, you have your projections for tomorrow, stuff I'm going to cover in a few minutes. Okay? Your accumulation range is less than 50 pips. There's a checklist in the student folder, but this is what you're looking for. All right, I'm looking at a bunch of pairs. At 1 o'clock, I'm subtracting the high from the low. Asian ranges that are not blown out. Be loyal to the pattern, not the pair. Loyalty to the pattern means that I'm trading pairs with less than 50 pip range. I'm looking for the breakout. I'm not a breakout trader. I'm looking for the breakout. False move, which 3 swipes will be underway. I'm waiting for the high of the day or low of the day to settle in. I'm waiting for that number to be formed and the dealer to move off of that number for it to be a lock. For, what did I say, 84 by 86 to be the high of the day. I need the dealer to stop pushing the high, don't I? For 61.30 to be the low, I need the dealer to quit hitting the low. Okay, ask yourself this question. Has the dealer held that level for around 30 minutes? If the answer is 30 minutes, then you should see big fat Euro tracks on your chart. You should see an outside structure forming the low or the high. If you see one of those two things, a big outside structure where he's trading off of the number, or a big railroad track set where he's now trading off the number, now you understand the 30 minutes. Okay, so yes, this fits the 30-minute criteria because he made a high 25 pips ago and he's trading off that number hard. Is a pattern present? Do I got railroad track, spike, the stuff that Steve went over? Do I have the outside structure? Do I have hammers, pins, orange hearts, blue stars, green clovers? Do I have those things in the serial? Did he come back for more? Did the greedy bastard come back for the retest? Did he come back for more? Okay, coming back for more indicates second leg behavior. Place your entry with your stop loss and take profit orders. We have scripts for that. As soon as the trade is on, set your stop for 32 pips, whether you're going to be there or not, because I don't want you to run to the bathroom and come back and get stopped out. It happens. So set your trailing stop for 32 pips. If you're going to manage manually, then just watch what it's doing to see how it plays out. Just like the videotape. Hang out and watch how it plays out, okay? Okay? You have to approach the screen systematically. You have to have some routine. You know, it was taught to me actually by John and Hubert from Trade the Markets that I'm pretty sure he's the one who coined this, and to quote him was that trading should become like factory work. If you're too high on your wins and too low on your losses, you're going to make emotional decisions. You should come in, you should have your routine. Okay, you know how like baseball players, the process, like they fix their shirt, grab their cup, adjust their helmet, whatever their business is that they do. That's their voodoo or their process to make them get ready. So you need to have a process. Come in, adjust your helmet, sit down, move your mouse around, whatever it is for you. Rub some dirt on your hands outside in the front yard and come in. Rub some black chalk, that black stuff under your eyes like the football players. Whatever it takes for you to have your ritual, your routine, that's what you need. You need where you come in, sit down, you have your charts open, you like the pound, you look at daily, 4 hour, 1 hour, quick look, see if any all-time highs are present. Then you drop over to your 1 hour, count the levels. Okay, man, right off the bat, I looked at the Asian range. It's 110 pips. I'm not trading that pair today. It's blown out. What's my second favorite pair? Second favorite pair, GJ. Love that pair. Okay, what does GJ look like? Man, yen hardly moved, tight range. GJ's holding around 37 pips for the channel. Good stuff, man. You're trying to funnel down the best trades or the best picks of the day. Okay? You gotta develop a discipline. We talked about the psychological edge and the things. You know, like, I make jokes about it, and I don't mean any disrespect to anybody, but I joke about blogging and looking out the window, the grass was green when I took the trade. That's all crap to me. To me, the discipline comes from the knowledge. Now that you know, you got to stop behaving like a retail trader. You know that it doesn't work, or we wouldn't be here together. You know the stuff is no good. So now that you know to stop behaving like a retail trader and start behaving like a market maker, you got to treat the business from the market maker side of the screen, and that's where the discipline comes in. You got to tell yourself, signature trade. My signature trade is I'm only going to take second legs. My favorite trade is the safety trade coming off the peak formation because I know the peak formation is a lock. That's what I look for. If I don't see it, I try not to trade. And I have to say try because I'm human and I like to trade. Right? So that's what you have to do with yourself. You have a primary trade, secondary trade, and you scan your array of pairs. Should be the majors and a couple of crosses, 8 to 10 pairs max. You scan your pairs for those types of trade. You should be able to see the peak formation safety trades coming from a mile away. You should be able to see them coming 12 to 24 hours out. Because if the peak is put in mid-London and it goes into consolidation, right, and holds, and then at London Open, 24 hours later, it makes another peak formation low or makes a stop hunt low, that was a day ago. Monday night, if they make a low, the low of the week on the chart, and you're not sure that's the low of the week, the dealer pulls off that level, goes into consolidation, you see this trade coming a mile away. Those charts should be flagged for observation coming out of London. And then do like I told you. Draw your line, project and anticipate. Okay, man, I see a peak on pound dollar. I see a peak on euro. So my projection is, the pair did this, it's in consolidation. My projection is, here's the Asian range. Stop hunt 25 to 50 pips. There's my stop hunt box. I expect the dealer to do this. Boom, boom, or boom, boom. That's it. That's my trade. If he does that in my face, I got you, baby. I own you tonight. And that's what you want. If he does this, straight rise, I missed the trade, man. Because here's what happens when he does the straightaway. And this is what jams up a lot of people. Is that when he does this, the straightaway, he's going to mess with you guys. Because he knows you had my class. He does that. And a lot of you take that M, not realizing where you are in the cycle, and you don't use a tight stop. That is a pattern. So if you use a 10 pip stop over the second leg, your risk is 10 to 15 pips, depending on where you got in, right? That's manageable. But the problem is you don't. You put a stop all the way up here because you want to be right so bad, and then he proves you that you were wrong. And you end up giving up more pips than you should have because you're countering, you're trading the wrong way back towards the peak. Okay? The pattern is always a valid trade. But I don't want you to trade back towards the peak formation coming out of level 1 unless you have the discipline like Kim, K, to put a 10 or 15 pip stop loss. Because then she'll turn around and make it right back on the next trade. You don't have to blog. You don't have to send me emails about you saw a cat walk by your window and it wasn't black, so it looks like a good day to trade. I don't want that shit from you. But what I'd like from you is a signature trade with a hard set of rules mentally. There's no way you're going to have discipline in the trade on when the trade's on if you don't at least lay out for yourself some type of trading plan. Okay? Some type of rules. You want to write it up and send it to me? I'll take it. And I'll review it and I'll let you know where you're at. My friend Zaim wrote me, no joke, about a 20-page trading plan. That's the guy that didn't believe me and spent days and days and days drinking Red Bull, going back and developing perfect M's and W's, and the guy that did the spreadsheet. I love that guy. If he's here, I'm not making fun of you, buddy. I love you. You're a great dude, and I hope your kids are doing well. Anyway, because in his mind, he's an engineer type, a highly intelligent person, and me saying it was not enough. He had to prove it to himself. So that's where his discipline came in. He went back and formed his own discipline. That's where my discipline came in, because the market maker made me make a notebook full of highs and lows and subtractions, and that's where it comes in. I'm like, okay, enough of this behavior. I understand now. The second pass is the second leg on the chart. That's what I'm looking for. Okay? That's the stuff that you have to develop. And I don't mean, what's the weather outside? I felt pretty good. I slept great last night. The confidence comes from understanding the method clearly, and whatever amount of research that takes for you, homework, R&D, whatever we want to call it this week, that's how you have to validate what I'm saying in your own mind. And once it's validated in your own mind, the discipline will come. The confidence and discipline will come. Okay?